very much, Mr. Tangsale. And with that, we now invite our guest of honor, Sri K. Subrahmanyam. Sri Subrahmanyam joined the Indian Overseas Bank as a probationary officer in 1975. And in a banking career spanning 3 decades, he served various positions across the country as well as overseas. He has served as the branch head at the bank's major branches in Hyderabad, Ahmedabad, and Mumbai. He was also posted as the regional head for Kolkata and Vijayawada region, and has been posted overseas as the chief executive of the bank's Singapore operations. Currently, he is the executive director, Union Bank of India. Let's put our hands together and welcome Sri K. Subrahmanyam.
Shri Ashwini Kumar, Chairman, Dena Bank; Shri Tangsale, Chief Executive, Indian Banks Association; Shri Puneet from Cisco; Madam Trishna Guha; ladies and gentlemen, good morning to you all. IBEX, in fact, is one of the key annual events that is looked after by all who are concerned with technology in the banking industry. It's my pleasure to be here, and in fact, I have been eagerly looking forward to participate in this. Technological adoption definitely is a very broad-based one. Those of us who have been in the banking for 3 to 4 decades, as rightly put by Mr. Tangsale, we have seen from manual ledgers gradually evolving to ALPMs, then to total branch automation, and finally to CBS. It has not stopped there. We have been seeing banking evolving and adopting more and more technology. Friends, information and communication technology have become a very integral to banking. And not only banking, in fact, it has become integral to our very lives. It's difficult today to envisage life without technology, without a cell phone, without internet, email, DTH, computer, laptop, tablet, phablet, and whatnot. In fact, the moment we wake up, we look for time in our mobile phone probably, not at the wristwatch anymore. We refer from keeping an eye that wishing people we use our mobile. It happens through our cell phones all the time, all the things. We want to buy things, we go to our mobile phone. Whether booking movie tickets, travel tickets, paying bills, reading news, watching movies, or anything, or even watching the stock movement, stock prices, we rely on mobile phone or our desktops. In fact, people have started buying homes also online. In fact, look at the challenges that the bankers have in harnessing the technology, information technology at that. Today, information technology is omnipresent. ICT revolution has impacted the way we do banking. Definitely, we have moved towards branchless banking. In a sense, the customer is no longer tied to a single branch. CBS no doubt has removed the customer from being a customer of a branch to, it has changed to customer of a bank. You can deposit or withdraw money from any of the branches of your bank at any branch. You need not be visiting the branch even for a single day by being the customer for years together. Several of your banking needs could be met without you having to attend a branch ever. You can deposit, withdraw, transfer funds without visiting the branches at all. You can go through the ATMs, you can go through a desktop, you can go and access your bank through your mobile. I am sure some of you would not have visited the bank branch, your own bank branch for years together. Banking today has transformed into a technology-intensive and customer-friendly model with focus basically on convenience. Most of the banks are now adopting technology in a big way and providing services such as net banking, mobile banking, SMS banking, and in fact, some of them have shifted to social banking as well, social media for banking as well. The current generation, which are far more tech-savvy, have demanded banking to be tech-savvy. So, mobile, card payments, to virtual advisors, to automated cash machines, and social network have become the normal banking channels. Today, a combination of new regulatory requirement, evolving customer needs, and the emergence of new technologies and ever-increasing competition is driving unbundling of banking. This has pushed the market towards a tipping point and created a clear window of opportunity for banks to seize the initiative and grow in a period of intense economic uncertainty. The rapid advancement in technology has also enabled a revolution in the working style of the banks. However, changing dynamics of banking business also bring a new kind of risk exposure. As with other resources, it has costs attached to it, and with substantial investments in IT infrastructure, business leaders will have to seek answers to whether the infrastructure is being used optimally and for the benefit of the banks. Adaptation is the key to stay relevant. In order to stay competitive in the marketplace and remain relevant to its customers, banks have to revamp their business models or some parts of their organization by streamlining operations to better meet customer needs. However, as challenging as the customer environment is, if one aims for a longer horizon, say the banking sector in 2020, India comes as a land of opportunity, provided that banks trim their sails for and better adjust to emerging challenges. Brace up for the competition from unseen quarters. In present scenario, where new competition is rapidly emerging from outside, the traditional banking sector is creating new threats for traditional full-service provider banks and forcing them to think out of box to keep up the pace. Ongoing convergence between banks and other players in areas like payments, telecommunications, and retail is creating new competition and innovative ways to do business. Rule online to stay ahead of line. Consumers view online banking as the single most important area in which banks should invest and develop. Mobile banking activity, meanwhile, has increased nearly 50% since 2012. Social media is changing the way people buy and sell, potentially relying on less on traditional bank advisors and more on friends and others who offer advice through digital platforms. Technology tools, namely tablets and smartphones, and greater transparency regarding pricing and services are empowering customers like never before. As a result, large banks run the risk of being outmaneuvered by digitally oriented competitors. Placing their strategic focus on best servicing customers, these emerging competitors operate and adopt more quickly, creating new tools and services that quickly become the industry standards. The focus on digital, like the other trends, represents both a threat and an opportunity. The era of physical scale is over, and banks can no longer win through size and operational footprint alone. Instead, leaders will win by finding innovative ways to improve the customer experience and adapting to market changes. The way they will feature both scale and flexibility. Model businesses anew to gain market share in profits. The volatility in the external environment, marked by factors like interest rates and economic and market cycles, is severely impacting the banking industry, creating risks for slow-footed banks, but opportunities for those who are nimble-footed, can become more agile, techno-savvy, and innovative. A few of today's full-service traditional banks will have the foresight and financial and operational ability to evolve from existing market positions. Others could begin making the required investments to also move in that direction, advancing their existing business models to effectively compete with new competitors. Do nothing and try to cling to the status quo. risks losing significant market share and be vulnerable to a potential acquisition by other large banks. To avoid being marginalized, traditional banks must take three distinctive steps to sustain profitable growth. 1. Simplification and optimization. 2. Agility. 3. Continuous innovation. First step is about driving efficiency through simplification and optimization. Almost all banks are already taking steps to optimize and simplify their businesses. In order to drive efficiency across organizations, for example, they are eliminating redundancies, improving processes and technologies across business units, products and operations, and manage regulatory requirements more efficiently and effectively. However, while these measures are worthwhile, they are not enough to provide a sustainable competitive advantage. Instead, there are new baselines required for banks to merely maintain their current position, not to improve it. I think most banks are currently operating at this stage. Second step is adapting through agility. Agility is not merely a synonym for digital. It also includes mobile platforms, social media, and analytics. For example, banks should transform their IT platform to overcome the constraints of legacy technology in the back office and empower an analytically driven front office. Robust analytics should be emboldened in all processes throughout the organization. Banks should also become far more customer-driven instead of product-driven, making decisions to improve their offerings and proactively meet customer needs. Mindset should shift from managing unit costs to managing units customized. Very few banks have achieved the level of agility that will be needed to outperform in 2020. Third step is of differentiating through continuous innovation. For leadership in the decades ahead, banks shall have to separate themselves from the pack through continuous innovation across the enterprise. That means they will have the ideas, vision, and leadership to not only stay ahead of the market, but to actually reshape, likely in the context of a broader value chain than envisioned today. Bank leaders have a challenge at all the three steps to balance the innovation needs of the business with ongoing scale and efficiency and requirements of the organization. Agility and product commoditization expand the business models for success in the future. Building the future-ready banks. As per capita income grows and people move up in the income quartiles or deciles, their retail banking needs also would grow. Next-gen customers who are below the age of 15 years and waiting to enter the banking industry in the next 5 to 10 years are estimated to be around 350 million in our country. Banks need to segment their customers into various brackets based on strength of the relationship. This strength will depend upon factors like share of customer wallet with the bank, income class of the customer, transaction pattern of the customers, etc. The next generation of internet banking will add value to banks' segmentation approach. Banks and customers now interact on several platforms today, for example, branch, ATM, internet, mobile, etc. It's important to make all these interfaces hassle-free and customer-friendly. This is necessary to avoid the bad experiences of specific channel tarnishing the customer experience and consequently the perception of the customer to the bank. Digital India, the gateway to knowledge and efficiency. Prime Minister's new Digital India program is an ambitious and comprehensive initiative to transform the country into a digitally empowered one and a knowledge-driven economy. It aims to deliver government services to and ensure administration and welfare of the people of India electronically compliant. To give a major boost to universal access to mobile connectivity and internet access in the months to come, the government aims to connect 2.5 lakh villages through broadband and phones and make them Wi-Fi accessible. The schools and colleges in most of the villages are going to be connected by this and opening up a huge customer base for the banks. Its aim is to empower inaccessible populations, administer governance and welfare, and deliver civic and financial services to semi-urban and rural areas. For banking sector, The creation of broadband highways in this manner will offer extended infrastructure and greater ease of access to vast stretches of the country's as yet unbanked areas. India already has a 300 million internet population, as estimated by Internet and Mobile Association of India. The internet in India took more than a decade to move from 10 million to 100 million, and 3 years from 100 to 200 million. However, it took only a year to move from 200 to 300 million users. Also, there has been exponential growth in the country's e-commerce space. Consumers are now buying almost everything online, from even homes are being bought today online. And on most occasions, they are using credit debit cards for payments. India's card base, namely debit card and credit card base, stood at 486 million as of November 14, increasing 21% year on year. The entry of credit information companies has helped us in accessing comprehensive data of credit history of consumers and thereby improving the objective of credit evaluation of customers. With renewed focus on cost saving, there is tremendous scope for further penetration of technology in banking. Mobile is going to be the most influential aspect of e-commerce business in India. Mobile banking is witnessing 15 million transactions a month currently. This is more than double of what it was a year ago. From the pace at which mobile banking is being adopted in the country, we may see a great revolution in this area. Friends, in the last few years, we have made good gains on several indicators of techno-banking. But banking is not just about access and logistics. In these fast-changing times, we need to reassess the client's needs, understand their requirements of tomorrow, and come out with more and more innovative products, portfolios, and services. Realign delivery platforms, ensure ease and transparency of transactions, evaluate security concerns, and seek solutions to them, and thus play a great role in nation building. It is here that a platform like IBEX India has an important role. Help bridge banks and technology and service providers. I believe IBEX 2015, the 3-day conference cum exhibition, will definitely act as a catalyst in this direction. I wish the organizers of this conference and all the participants all success. Thank you very much.